Let's take one more practical question. Before I start this practical question, let me remind the accounting cycle based upon journal entries. You know, all transactions are converted into journal entries. Journal entries are converted into ledger posting. Ledger posting is converted into trial balance, and trial balance are converted into final accounts. So we have got the trial balance now in T shape. Trial balance as on 31st March 2013. Debit balances: cash 5,700, purchases 1,000, wages 300, total 7,000. And on right hand side, capital 5,000, sales 2,000, total 7,000. So what have you noticed in trial balance? There are wages 300 rupees, means direct expenses are there, rupees 300. You know the difference between direct expenses and indirect expenses. Wages are direct expenses. We are going to assume that these are directly related to our production. And the closing stock at the footnotes, that is closing stock as on 31st March 2013, rupees 200. So let's be ready for the final accounts. Number 1, trading account, then profit and loss account, then balance sheet. Write down the items of trading account in advance. On debit side, to opening stock, then to purchases, then to direct expenses. There is one direct expenses, so write down to wages, then to gross profit. On credit side, by sales, by closing stock. You know, opening stock and closing stock are always at the corners. Opening stock is always on the debit side, closing stock is always on the credit side. Opening stock is at the top corner and closing stock is at the bottom corner. So stocks are always at the corner. And the format of balance sheet will be capital plus net profit. You can write down in advance because these items are inner column items. Okay, let's start the final accounts. Number 1, the item of cash is 5,700. So where will it go? It will go to the debit side of balance sheet because this is the debit item. And debit side of balance sheet is asset side. So write down cash 5,700. Then purchases. It will go to the debit side of trading account. Rupees 1,000. Then wages rupees 300. It will go to the debit side of trading account. So all debit items have gone to the debit side of different formats. Now come to the credit side. Capital is on credit side, rupees 5,000. Where will it go? It will go to the credit side of balance sheet in the inner column. Rupees 5,000. Then sales. It will go to the credit side of trading account. So buy sales 2,000. So you have seen that you are taking care of the principle, our golden rule. Don't miss the item, don't repeat the item. So we have not missed any item, we have not repeated any item of the trial balance. And secondly, debit should go to the debit, credit should go to the credit. So all debit items of trial balance have gone to the debit side of final accounts, and all credit items of trial balance have gone to the credit side of final accounts. Now the closing stock. Closing stock is not in the totals. If you take any item out of trial balance, means from the footnotes, it will hit twice. One on debit side and once on credit side. You know, closing stock will be taken to the credit side of trading account, then it will be taken to the debit side of balance sheet. And the debit side of balance sheet means asset side. So write down 200 rupees in the trading account and then write down closing stock in the asset side, rupees 200. Now let's complete trading account first. Total on credit side 2,200. and to gross profit. What will be the amount? This is the balancing figure. This is the weaker side. The amount will be 900. Total on both sides 2200. Now start profit and loss count for the year ended 31st March 2013. By gross profit 900. You know, gross profit is always transferred to the credit of profit and loss count. And on debit side to indirect expenses, nothing. Then what will be the net profit? That will be rupees 900. This is the balancing figure because the total on credit side was rupees 900 and the total on debit side was 0. So we had to supply 900 on the debit side because this is the weaker side. So this type of figure is called balancing figure. So profit and loss count now completed. Now move to the balance sheet. You know, this net profit will be added to the capital, opening capital in the balance sheet. So opening capital was 5000 plus net profit 900. They will be written in the inner column. And in the outer column, you will write down 5900. So total on capital and liability side 5900 and on asset side, the total is 5900. It means the question is perfectly alright. Our balance sheet is agreed, means the totals of balance sheet on both sides are equal.